The decision by Nigeria's central bank to raise the loan-to-deposit ratio of commercial banks in the country might have started yielding positive results. It's now becoming easier for small to medium enterprises to access banks and at lower rates. The Apex Bank raised the loan-to-deposit ratio in Nigeria to 65% last October in order to compel banks to lend to SMEs, retail, mortgage and consumer sectors. Here's Deji Badmus with more on that.
Perhaps nothing captures the new deal in the Nigerian banking industry than this giant billboard standing on a very strategic point in Lagos. SMEs have suddenly become the darling of commercial banks since the central bank raised their loan-to-deposit ratio to 65% and assigned a weight of 150% in respect to lending to small and medium enterprises, retail and mortgage.
There is currently a lot of credit going to the system. We've also seen a moderation in interest rates, in fact, a crashing of interest rates. Today, we are seeing banks deposit rates in the number of 2.56%. We've also seen a moderation in lending rates.
Among the SMEs who have benefited from the new loan regime is Tuteria, an e-learning startup where Kende Ishie is a finance manager.
Sometime last year, we discovered that as a growing company, the space where we were was a little too small for the number of staff that we had, and we decided, we have to get a bigger space, something more comfortable. So we reached out to our bank account manager and we said, okay, we're aware of this directive from CBN. Can you let us know how we can benefit? And then he got back to us and said, this is the amount that you guys, that your company really can take at this time. And in about a week, our accounts were credited. They just sent us the payment plan and all of that. And it was really little.
Before the new CBN LDR policy, it would have been practically impossible for small startups like Tuteria to get a loan from a bank.
But of course, we know that the SMEs brought a lot of risk to the banking system. And that's why the banks are reluctant to lend to them. But the central bank is trying to create incentives to make the banks lend to them. When the figures are out, we will see what additional volume of credit went to the SMEs. But the incentives are there for the banks to lend to the SMEs.
At some point, the central bank contemplated a further increase in the LDR to 70% to further drive more credit into the system and onto the hands of SMEs. But it stayed action on that at the moment, saying it had noticed a remarkable increase in the size of gross credit by deposit money banks to customers.
Should the central bank increase it to 70%, it could have unintended consequences. To the extent that the banks begin to look for very weak credit customers to lend to. And that could lead to an upswing in the number of performing loans.
For now, SMEs in the countries are enjoying some breath of fresh air as far as bank loans go. Their chances of securing low-interest loans are at their highest than ever. And like the message on this billboard demonstrates, quite a number of them are rushing to the banks, finding the offering on the table very irresistible. Deji Badmus, CGTN, Lagos, Nigeria.